Welcome back to the channel, guys. I'm your host, Buckning, and today we're going to give you I think we're on week 5 update on the dividend portfolio that we build right in front of your eyes. If you're new to the channel, welcome. Hopefully this video adds some value. If you're just seeing this one now, consider leaving a like, subscribing, leaving a comment, anything of the sort, and hopefully it does add value. If you're not new, thank you for your continued support, and very much appreciated. And hopefully a lot of these videos are adding value, and just welcome back. So we're going to do the end of the week updates on Friday here. We'll see how we'll talk about how markets close this week. And we got some few questions that we'll probably answer at the end. Before we get into that, we're just going to give you an update here. Obviously, Canadian markets will be closed on Monday, August 12th. Because of our holiday of Thanksgiving in Canada. So currently one day we are sitting at $628.10. We were down $2.80. That is 0.44%. For the week we are up $15.85. That is a positive of 2.59%. And for the month we are up $17.87, 2.93%. And then for the 3 months, we are up $18.10, 2.97%, and the same for year and all. And we'll just kind of go through the stocks today. So today, this morning, we did purchase a position in BMO. Here it is. We bought one share this morning at $81.98, which is very, very good. You can see that BMO is going back on the rise again, because I believe it was I think it was last week. Yeah, last week we purchased BMO at $76.44. So definitely a uptrend in BMO, making a comeback from the downfall back in March, I believe it was. So we'll just kind of go through it. We have 2 shares of BMO. The average price or the cost basis of BMO is $79.21. Today's return is a negative 63 cents, down 0.38%, and our total return right now is a return of $5.14 and 3.24%. Now we have Bank of Nova Scotia as well, closing today at $56.43. We own 7 shares. The average price at cost basis of $54.58. Today's return is $2.17, down 0.55%, and a total return of 12.96 at 3.39%. So that is that. We currently have $69.53 sitting in the cash account, waiting to be deployed next Friday when we deposit another $100. That might, if BMO stays the way it's at, which hopefully not, we will be able to buy 2 shares this time, because every week we invest $100 into this account. So stay tuned for that. So we will go to trackyourdividends.com to update the portfolio here. And so we will switch over. Here we are. So you can see me. Currently, last week, we had a portfolio value of $477, a profit of $18. Our dividend yield at the end of the day, at the end of since our last update, was 6.17%. Our yield on cost is 6.42%, and an annual income of $29. We had 1 BMO share. The price today closed at $81.78. Our average cost was $76.44 until we update that. We have a profit of 5.34 in capital appreciation. Dividend yield currently sitting today is 5.18, and the yield on cost for us is 5.55, with an annual income of 4.24, $4.24. 7 shares of Bank of Nova Scotia. The closing price today ended at $56.43. Our average cost is $54.58. Our capital appreciation of profit is $12.96. The dividend yield today ended at 6.38. Our yield on cost is 6.6%. And the annual income is $25.20. And so we are going to do some updating here. In the BMO stock, we have, close that. It's a new holding. We will enter nope, not B, that BMO.TO. Purchased one share at the cost basis of $81.98. We'll add that to the portfolio. Give it a few seconds. It'll update. There it is. So portfolio value is now updated to $559. That does not include the cash portion. We are up a profit of $18. Dividend yield sits at 6.03%. Our yield is 6.23% in this portfolio. Our annual income is $34 per year. So what has changed is now we own 2 shares of BMO. The price it closed at today was $81.78. And our average cost right now is $79.21. I'm just going to cross-reference here and make sure that that is correct, because we don't want to mess it up. It is correct. And so currently our profit sits at $5.14. Dividend yield ended at 5.18%, and our yield on cost currently is 5.35%, with an annual income of $8.48, which brings our total to $34 per year, which is great. And so that is it for the end of the week. I think the market ended very, very strong this week. Probably better than the past 3 months. We did have a red day today in the most parts, most sectors, but it still ended and closed better than the past 3 months. And so very happy with that, and we'll just continue going the way we're going, keep on moving along. So we have a few questions that some people left for comments, and we'll just kind of go through it. So first question comes from Charles Villanova. His question is, can you still get paid dividends with just personal account with Wealthsimple Trade, or it has to be a TFSA account? So basically the question is, can you get dividends if it's in a personal account versus the TFSA account? And the answer to that question is yes. If you purchase a dividend stock, whether it's in a RRSP, so Registered Retirement Savings Plan, a tax-free savings account, TFSA, or even a non-registered account, aka personal account on Wealthsimple Trade, you can and you will still receive a dividend payment. There's no stipulation or rule that says you cannot receive a dividend payment in a personal account or an RSP account. They are all the same. If you own a trading account on whatever platform you use and you purchase a dividend stock, you will receive a dividend based on if it pays one quarterly, annually, some pay monthly. And you'll receive it no matter what. So hopefully that answers your question, Charles. Thank you for the question. And next question comes from Vicky Rana. The question is, what's the difference between TFSA account versus personal account? So the difference is taxes. I'm not a tax person, so if you want to seek tax advice, go find an accountant, and I'm sure they'll help you understand this. So the difference is in a tax-free savings account, every dividend payment that we earn, any capital appreciation that we have in a tax-free savings account is exactly what it means. Is I don't get, the portfolio or myself will not get taxed on the dividend at all, or any growth that happens within the tax-free savings account. So let's say the BMO stock that we have grows to $100 and we decide to sell, which will never happen. Because it's a strong company that is a hold forever for me. Let's say it does go to $100 and I decide to sell it. The capital appreciation or the capital gain that happens from what I bought it at to what it was worth at when I sell it is tax free, so it doesn't get taxed. It grew within the account, it stays in the account. Any growth that happens in the account doesn't get taxed. Whereas a personal account or a non-registered account, if you earn a dividend you will get taxed immediately. The dividend will get taxed immediately. You will get a slip, some sort of tax slip from whatever trading platform it is, and you have to bring that in, and you got to claim taxes on it because it counts as an income. Now, I'm not an accountant, so I don't know. So please go seek an accountant if you want that answered. So in a personal account, same thing. If it's capital appreciation or you buy and there's appreciation in the stock and it goes up and you sell, there is a tax, a capital gain tax that happens on that account or that sale of that stock. But correct me if I'm wrong, but that's my understanding of it. Go see your tax guy. That's why I recommend in today's world, and this is just my opinion, this is not advice, this is not financial advice, it's just my opinion. In today's world, you should max out your tax-free savings account no matter what, before you do anything else. The thing is with tax-free savings account, because they didn't have this since forever, this just came out in 2009, and there are limits to it. So you can only put so much in, and you can only take so much, well, you can take as much as you want out, but you can only put so much in. And there's limits to that every single year. So be very, very, very careful with that. Be aware of your limits. Find out what your limits are on your tax-free savings account. And even if you have two, doesn't mean you get double the contribution room. It's overall in all your tax-free savings accounts, what are the contribution levels and things like that. So my recommendation is if you're going to start trading and you have room in your tax-free savings account or you have an existing tax-free savings account, max out your tax-free savings account. Then the next step is an RRSP. I don't believe in RRSPs that much, to be honest with you. It's just, it doesn't work out in today's world as much as it did for, let's say, a couple generations ago or before the tax-free savings account came out. There is a benefit to it. If you make over a certain amount, I would definitely talk to your accountant if you have one, or go seek accounting or tax advice, to be honest, because I don't have any idea about that. I just give it to my tax guy, and he takes care of it. So hopefully that answers your question, Vicky. And then this person also asked me if I could do a video on my mutual funds portfolio. So currently I'm in the process of getting rid of my mutual funds. Currently it's like in the air in transition, and I'm moving it to an index fund, which is still a mutual fund, but it's just in the air right now. And so I'm going into the NASDAQ index, in a mutual fund form. And so mutual fund kind of way. It's not directly purchasing like QQQ. That's a ticker symbol if you're wondering, in the US, where it's the NASDAQ. It copies the NASDAQ. So indexing is a great way for someone like me or anyone who's young. It just mimics exactly what happens in the NASDAQ composite. Usually it's the top 100 companies, but I'm gonna do it in a mutual fund way. So I'm currently in the process of moving all my mutual funds into this quote unquote index fund or mutual fund. So so that might be a video in the future, but most likely not, because this is the dividend channel where we invest $100 into the account. But who knows? It might be a surprise. And so other than that, guys, thanks for watching. Hopefully it did add some value. That is the update for the week. And don't forget, every week, every Tuesday, we put in $100 into the account and we build a dividend portfolio right in front of your eyes so that you can start now. You don't have to wait. Just start now and start building that portfolio for yourself and create an income. And well, not an income, but unless you want it to be an income, but that's totally up to you. But hopefully it did add some value, guys. And it's Thanksgiving in Canada. It's a Thanksgiving weekend. And so happy Thanksgiving, and we'll see you in the next one. Bye.